Hello and welcome at Stocks Advisors channel. Here at our channel we are looking for interesting buy opportunities for US-based stocks. In today's episode we will talk about Skillz Incorporated, traded at New York Stock Exchange, ticker name SKLZ. Well, we already did SKLZ at the beginning of February. It's really nice to see that it behaved as expected. Indeed, we saw this very nice bounce from the period ending of January, beginning of February, with a very strong acceleration mode, and of course now we see a continuous decline. And the question is how to trade further. What can we see? What pattern it is actually, and can we detect something here? Well, there is a classical behavior, of course, now taking place. It's just a standard, very strong correction, and we just need to know how to enter here, how to play. So with this being said, to understand how to play with it, let's do a quick analysis for SKLZ. As always, at our daily charts, we have three moving averages depicted. Here on the left, you see their legends. These are moving averages 20, 50, and 200, being green, blue, and red line correspondingly. Here you see them. So if we look at them carefully, we can see that moving average 20 is declining already. It's not just decelerating, it's really declining downwards, and it might form the magic cross down soon, so it will work as an additional catalyst down, because this would be most probably the truly magic cross, since a moving average 50 is coming here and the price already did rebound slightly. So this means that it will be a magic cross down and the price will be up. So it will work as a real, it might work as a real negative pusher. And this also would be according to the classical behavior, because what happens with these stocks, after the rebounds, we also had this similar rebounds by 17th of February, where moving average 50 worked as a support line. You usually go all the way until moving average 20 from 50, and then you have go down. Then similar situation, you go again to moving average 20. It works again as a resist line. If not pierced, if pierced, of course, it's another story. If yes, it goes again, and only then you have actually a major, let's say, recovery. So this is kind of skewed W shape, which we can classically play here. And if you look at today, what was happening actually, we stopped at the support level at 24, and well, actually 3 trading sessions we stopped at support level 24. Then today the price really went up, but it didn't hold. So we see the dark candle, meaning that we started with the jump upwards, but then the price didn't hold. So bears prevailed completely during the day. So what this might mean? This might mean either volatility or at least some rebounds towards moving average 20, which also can give us up to 10% profit. And since at our channel we always aim to 10 to 15% profit, 10 for slowly moving charts and 15 to fastly moving charts, this is still within our target, so it's still nice to play. Therefore, it would be immediate buy within the size of the current body of the candle and all the way until the lower support level, which you could see here at 22. And if you look at it, this will make it actually the level of S2. So anything below today's finish until the S2 level would be the first buy opportunity. Let's write it here, which might still cause a quick rebound, if it happens. If not, of course, then we need to wait longer. But if it rebounds, you can sell just at moving average 20. In the vicinity of it, it should make 10 to 15%, as we always aim for it at our channel. So what this would be, it would be between 22 to 25.70. A little bit broad channel indeed, more than 10%, but also the volatility is broad. You see where actually decline levels are also quite high. From the level of 46 plus, we are now about 24 free trading sessions ago, so it's almost 100% decline. Now, of course, a little bit bounce back, but we still could see a further correction. If further correction takes place, which is still possible, of course, the very strong, unavoidable support line will be, as always, at these highly growing stocks in the vicinity of moving average 200, which will be about 18 here, and here you see another level of 16. So this level, by that time, also moving average 200 will be on top of it, which will make it very nice double support. S3, S4 line will make it a very nice entry opportunity again, hoping for rebounds. And speaking of rebounds and taking the profit, we always, again, I repeat, we aim to 10 to 15% profit, because this is very important to take your profit in time. be really a profit taker and profit enjoyer. Never think in a sense that, oh, if I would waited longer, I could have made more. No, this is really a mistake. You really need to develop a strategy, trading with profit many times and taking your profit and enjoying it. So with this being said, actually the second level to enter would be from $16 to $18, which could be a very strong level. Maybe we won't even go that low, but still, if we have a decline, this could be happening. And then, not expected at all, I always keep saying this, but we always do a so-called doomsday scenario, or we keep funds for really severe average down if there is a very negative catalyst coming, because we want to be sure that we finish with a profit. So that's our strategy. That's how we calibrate and tune our analysis based on so-called mixed approach. Mixed approach means that we do three pillars analysis. One is technical analysis. Second one is non-linear averaging down based on support resist channels. And the third one is mitigation of risks and hedging of risks due to negative catalyst coming. And if really negative catalyst comes in, of course, the price could really go down, which would mean that we could return to the origins. And it's not that given, or it's not that it's expected, but if any happens, you will be really prepared. And it's always nice to be prepared rather than taking the loss. So with this approach, usually we don't discuss any stop loss initiatives, because it's not within this strategy. Within this strategy, we actually don't take loss. We aim to take profit, but it might take a bit longer time. So it's actually spending more time for profit rather than actually taking the loss and going to another stock. It's a little bit different approach here. So with this being said, that's the strategy to trade. Again, for quick traders, for daily traders, 10 to 15% profit, then either re-enter and check other videos. Otherwise, if you are more mid-term trader, let's say, you can see here the formation of downwards, let's say, line, and most probably we will rebound towards it, because also moving average 20 is in its vicinity. Let's call it R1, so it still might work as a very strong sealer. And then there is actually also, let's say, kind of, if confirmed tomorrow, we might see from either from these levels or these levels, still need to check it. A triangle formation could be observed, and we will see how low it will go. So I don't know the exact level, but once we define the major support level, which will stop the decline, it might cause also this very, let's say, skewed triangle. So I will leave this line like this with a question mark, meaning that we don't know exactly the angle of it. This will be seen soon. But once it is known, for mid-term traders, you can volatile within this triangle, so you can enter at the R2 level and exit at R1. If the piercing is taking place of R1 soon, then of course we will go for more consolidation within the channel of 28 towards 39, and we'll be trading there. But we will see later how it will behave. For now, it's only this quick trade that you can make up to 10 to 15% with this current approach should be quite possible according to this opinion video. So with this being said, that's the trading card. If you are more for graphical representation, you can look here, and then you can use it as a trading card for yourself. And speaking of non-linear average down, it's still classical 5 portions approach, meaning that you buy with 1-2-2 strategy. Shortly speaking, it means that the funds you would like to play here, you can split in 5 portions, which means that in first level, you can buy with first portion. Then if price declines to the second level, you can average down with 2 portions. And again, if some negative catalyst, some severe stuff comes in, people will be probably taking losses, stopping their losses, but you just can enter again with the remaining 2 portions and just enjoy the profit at the end. So that's the idea of a non-linear averaging down approach. So with this being said, that's all for SKLZ at the moment. Quite nice stock, little bit in correction move, but also opens very good opportunities. Of other parameters that are important here, it's RSI that is declining. Most probably it will go a little bit lower towards oversold area, because this will create additional push, meaning that R2 level is still to be confirmed. And MACD histogram is really nice. We are making secondary wave. So most probably it will be classical 3-wave, negative wave diagram before we go really up, but we will see later. But looks like it will be doing like this. So once this is done, again, reconfirming that we still need to see formation of R2, maybe a little bit piercing it. So S3, S4 is quite possible, and S5, S6 is just for hedging the risks, as I said. So that's all for Skillz Incorporated. Good luck with it. Also, please don't forget to subscribe to our channel for your first time watching this video. Press the bell button. This way you will not miss our new videos and new interesting discussions for US-based stocks.